Today, I'm here with Zack from Phipps, Brittain Real Estate. We're talking Kitchener. Zack, what's the market update?
We expect to see number of listings down and average sale price down a little bit in August. Our market 10 years ago was at 332,000. We have had a very aggressive run up and then a very steep drop. We are at the bottom part of a cycle or getting close to it in Southern Ontario. Everybody just take a chill pill. The sky's not falling. Our markets are fairly balanced, all things considered, for right now. But my quick and dirty advice is look for the best location you can comfortably afford and find a property that is in the worst condition. If I had to go back and do it again, I would learn more about financing earlier. It is a real key cog to real estate investing. It's not the deals, it's not the tenants, it's not the insurance, it's not the maintenance. It is going to be the time and the money that will eventually hold you back as an investor.
Welcome back to the Canadian Real Estate Channel. I'm Adam J.D. Martin, your host, and today I'm here with Zack from Phipps, Brittain Real Estate. We're talking Kitchener. Zack, what's the market update? Let's do this thing.
We're going to get into the market update. We're going to cover a lot of stuff after the market update too. Last month's video, Adam, I talked about our first deal, how we're scaling in other deals, and I want to show people exactly how I've done it and how we are doing it currently in terms of moving on from smaller deals into bigger deals and what we're doing to make that transition happen. And a brief conversation at the end for you investors who are giving serious consideration into either starting or really scaling your investment portfolio. That's something that obviously I have done for the last 9 years since I've been in the real estate business, but honest conversations I've had with myself and my partners about where we fit in, what value we bring to our investment portfolio, and how we're really going to build a sustainable portfolio. I hate the keyword sustainability, but it is so important. So we will talk about that. And then just right here, I had to give a shout out. If any of you guys follow me on Instagram or social media, I'm a big donut guy. Took the family up to northern Quebec, north of Quebec City, to do a race. Adam, I won't do long road trips with a 1.5-year-old again. You more mature people out there that have kids and families, you got to give me a heads up. I'm out here on my own. Not on my own. I have a wife, I have a partner, but I'm just saying, I'm making these stupid mistakes like taking a kid on a 10-hour trip when they're 1.5. Anyway,
Yeah. How much screaming?
icing
Tell
on
us.
exactly. Well, not enough to know that I'm not going to fricking do that again. But just a shout out to Montreal and a shout out to Bombolini. I had a donut that blew my socks off. If you guys were as a donut like savvy and as a donut craze head like I am, this would be a huge deal. Bombolini, Montreal, right off one of the big highways. No free ads. They're paying me for this because it was that good. Anyway, that's it. That's the only donut talk. Some
Okay,
quick
come on, hold
deals
on.
for our
That's the
investors.
donut with the cannoli filling, right?
It's the donut. It's the donut with the cannoli filling. It's
Yeah, okay.
freaking insane.
We're not moving on without at least stating that. Like,
That's
that's
it. No, that's it.
insane. Let's
It was
go,
crazy.
dude.
And it was good. And it was like not like, Boston cream filling from Tim Hortons.
Mm-hmm.
Blasphemy. This was
Yeah.
like some Nona has made this for like 40 years
Oh,
straight type
oh,
situation. So yeah, it
okay.
was fire. Shout out Montreal, shout out Bombolini's, shout out deals though. So two
Shout
quick
out
deals,
deal.
Adam. I don't typically share live deals very often. Two deals for you guys. One, a legal 4 unit in Cambridge, walking distance to downtown Galt, super quiet side street, a half a block from the Grand River and all the trails that run through that area. And it's over 4,000 square feet of living space. Massive property. Six
That's
car
awesome.
parking, super unique units as well. Like some of these are incredible. There's upside with rents, but opportunity as is, owner occupier, Airbnb, long-term buy and hold with upside to update the units and increase rents as you go. I like this one. DM me if you guys need more information on that. And then a legal triplex in Kitchener. East Ward, premium location. Two of the three units brand new in 2023, so rent controls don't apply. And two of the units are vacant. It's got double car garage attached and two exterior parking, which is rare for downtown. And as is, asking a little under 1.1 million. It's over a 5 cap. So if investors are looking for more just hands off, or they want something a little bit nicer to owner occupy and live in, they want to live downtown Kitchener, hit us up on this one. Last plug, I swear, investor hot list. I share deals like this before we bring them to market on the investor hot list. You investor hot list guys and girls get a little taste before I get anything that's going to be solid and get brought to market, as well as any of our off market deals and our market update stuff that we're going to go through now. You guys get it first. So I'm just saying, if you guys want on the investor hot list, link is right there and link is in the description. Hit us up on our website or follow me on Instagram. I get lots of people sending me messages on there to get on the list, ask me specific questions about types of deals or data they're looking for. I had some gentlemen reach out for me for some condo information because they see that the condo inventory is crazy high right now in Waterloo region. So, I
Yep.
see you guys looking out there and asking questions and paying attention to what's going on. This is a good way to stay in touch and see what we're working on kind of on a week to week basis. For those of you that are here for the stats, we're going to hammer these out. I want to remind people, Adam, seasonality is back. We said in the last few videos, spring, chugga, 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 a little bit crazier. And then we get a little bit of that dip in terms of volume of deals, as well as price points in June, but mostly in July and August. August typically slow, brother, everywhere in Southern Ontario.
Yep.
People are on their vacation. People are making their moves in the spring so they can get their homes in the summer, get it all ready for school, do any renos, move during the nice weather. Makes sense. So we expect to see number of listings down and average sale price down a little bit in August in pretty much any type of market. Now, what's interesting though was our average sale price is down about 1.7% year over year. What really I thought was interesting was inventory for townhouses and for condos ticked up a little bit, but overall level of inventory for residential real estate came down. So typically what we'll start to see is inventory will continue to stack up because not as many properties are selling. At least that's been the narrative for most of Southern Ontario and in Waterloo region. But the
Yeah.
reality is we don't have enough properties coming to market to replenish the ones that are selling. So we're kind of teeter-tottering back and forth kind of around this 3 months of inventory. That being said, if you're looking at townhouses, you're looking at condos, there's more inventory of those than there has been compared to detached homes or even multi-unit properties. For context, I was actually just looking before we got on here, and I'm pretty sure that there is less than 150 multis in town on the market for all of Waterloo region. Now, that's more than we've seen in probably 4 or 5 years, but it is pretty much right around what our 10-year average is. So the amount of opportunities isn't insanely, large, and the amount of good opportunities within that, those ones are still selling really quickly. So your days to market, your spicy ratio, that's the list to sale price ratio for anybody that's just tuning in for the first time. Those are relatively unchanged. But what we'll start to see, and I kind of go over it in my Zack notes, which we'll address after, but I had this slide up last month and I was gonna delete it, but I was like, it's just a powerful indication for people to realize like where
Yeah.
we're at in a cycle. I wanted to talk about market cycles, but I knew I was just gonna get off the rails and it would be a really long, deep conversation. I think it's important to discuss that. But for people that are specifically looking at Waterloo region, I want to give you guys practical examples and strategies on how to work within our current markets. This is just a really good visual representation to say, hey, our market 10 years ago was at 332,000. We have had a very aggressive run up and then a very steep drop. And we've been just a little up and down since that steep drop in 2022. So a reminder, people, we are at the bottom part of a cycle or getting close to it in Southern Ontario. And so if you guys haven't done it already, there's lots of videos that talk about market cycles on this YouTube channel. I highly recommend hit the search bar, go check them out, or reach out to myself or the other representatives on the channel with their specific markets and say, hey, where are we at in our cycle? What strategies are working in those cycles? But just like everybody, just take a chill pill. The sky's not falling. Properties aren't selling 3 million over asking price every deal now. Our markets are fairly balanced, all things considered, for right now. And Adam, you and I have talked about how it'd just be, I think, better for everybody if we had a little bit more balance and a little bit more sustainability in our real estate markets for both
Yep.
investors, owner occupiers, renters, homeowners. The last 5 years has just been very aggressive up and down. And that is really hard on a lot of people to be able to navigate such aggressive changes in both directions. My quick notes, and Adam, I'd love it if you chimed in, is data and news, it takes time to really impact the real estate market and then be reflected in the new data so people can make their decision. What I mean by that is interest rates coming down, baby. Takes time for buyers to get mortgage pre-approvals, start shopping, start offering, to see more competition and to see price data start to trend in the other direction if that's what it's going to do. That hasn't happened yet. Guys, that's going to take 6 to 12 months for the market to really absorb and reflect these changes at the bare minimum. So, although the sky is falling, the prices are collapsing, I'm seeing you guys in the comments. The end is not here, nor is the explosion of everything starting to sell and fly off the shelves.
Yeah.
So,
Yeah. And I think like just as important as those like technicals of like, yeah, people have to go get pre-qualified, people have to like get set up to be back in a buying mood. Like I think as important or maybe even more is just the emotional hangover that people get after there's large market changes, right? Like
people are
whether
scared.
that's down or up, people get scared, they get like fear, uncertainty, doubt, all those things really impact like this psychology of what's going on in the market. And I think that's as important as the actual technical, like bank rate drops. And then
Yes.
tomorrow, technically your affordability is greater, but that's not really how it works. Like it takes a little while for the market to respond. And what can't be really overlooked with real estate is like these transactions are happening on like 90 to 120-day cycles, usually, right? Like you're not
Yeah.
buying a house and moving into it tomorrow. Like you have to list, you have to prepare to list, you have to bring it to the market. It has to generally do its thing, which could be plus or minus depending on where you're priced at and what the building looks like and all these different factors. Then it sits while your buyer typically goes and sells their existing house, right? So it's like
Yeah.
there's all of these things that add to the delay in terms of like what could be seen as like a bullwhip effect on the market when things change. So it's not going to be immediate that you see these results. What Zach's talking about too, if you're sitting at home, just read the comments on like Zach's last video or 2 videos ago, right? People are going to be like, the sky is literally falling. The market's crashed. There's never going to be a house sold again in Kitchener. And then it's like, we just keep looking at the data and stay objective about it. And it's like, no, there's just factors that go into why things sit longer or why prices are going up and down. And those factors are
Yeah.
always changing and things will be okay. And again, it's not about timing real estate. It's about time in real estate, generally speaking. And that's why we look at things like cash flow. That's why we look at adding strategic value where we can. And that's why we don't panic when there's something on the news. Like something being on the news should not impact your investment strategy, right? Like
No.
long term, if an entire market's going to bomb, maybe, but that's not Kitchener or Waterloo, right? It's right beside Toronto. It's connected to all the major cities. It's right in the middle on the 401. It's got a bunch of immigration. It's got a bunch of really fantastic employers. It's been called like the tech corridor of Canada. That's just not what's happening in Kitchener Waterloo. So while there is all that fear, uncertainty, and doubt, I think just patience is really the virtue here that we need to flex. So
Yeah, well,
yeah,
we even talked about
things
in
are
previous
happening.
videos, right? Like, it's even like the first 5 properties in the first 5 years as a real estate investor are
Yeah.
going to be the most volatile, regardless of what market cycle you're in. But any real estate transaction is a 1 to 2 quarter minimum deal, right? So these things will take time to reflect in the market data. That's why we do the monthly videos. Some months there's not a ton of change, which is normal in real estate month to month, but it helps
Yep.
you investors stay in tune with these slight changes so you can adjust either your strategy or your expectations accordingly. At the end of the day, here in Waterloo region, A plus product with realistic pricing is still moving. Waterloo region is not a dead market. It would have to take so many things to go wrong for it to just be a dud market. But for all the reasons you just listed off and then some, Adam, Waterloo region will and is positioned to continue to grow short term and long term. And in the short
Yeah.
term, we see condo market, not my cup of tea for investment. I'm very clear about that. We work with a ton of investors that crush condo investments though. Whether they do pre-con, whether they're looking at student rentals, we have clients that'll come in and they'll purchase condos for their kids to go to school if they're going to go to Laurier or Waterloo or wherever and use it as an investment opportunity. So keep it as a short-term rental, sublet it in the summers, or update it and appreciate it over time if they're going to hold it. Like there are options, but straight up buying holes and some burrs actually look really good right now because the prices have depressed significantly from 21 and 22 and interest rates have started to come down into, I don't want to say the danger zone, but the kind of the sexy zone where, numbers start looking a little sexier again. Because a year ago, investors were banging their head against the wall trying to make sense of any of the numbers because prices hadn't come down and interest rates hadn't come down either. I also put on there some small development opportunities. You don't need site plan approval if you're going to build 10 units or less on a residential lot. So we're starting to see purpose-built triplexes and fourplexes, and we're starting to see townhouse rows, whether they're stacked or even 2 or 3-story walk-ups for 8 to 10 units. Smash down a single-family lot, slap up one of those. The numbers look chef's kiss. So we're looking at those types of opportunities. If you guys are here looking for those types of opportunities as well, we've posted a lot about the LRT, Adam, and the inclusionary zones in there. If you guys have questions about that, just thinking ahead, send us a message. And last but not least, investor hot list. We share data like this on the investor hot list. I'll leave, a sentence or two, a couple quick points. If I think there's some interesting data, hit us up on the investor hot list if you guys have questions on that. Now for some of the meat and potatoes. My first deal. So we've done a ton of these personally, and we've done a ton of them for clients because they can make a ton of sense. And so I kind of wanted to open up my world to the people that are watching our YouTube videos to see, hey, this is how I built my portfolio. It sounds weird to say, but like I'm not special. I was in the business selling a good amount of real estate, and I needed a place to live, and I knew I didn't need a whole house to myself. I wanted to get out of renting and get into home ownership, but I also wanted to make it a financial play. And I think a lot of people have those same feelings and those same ideas. So I did a duplex conversion as my first deal. I needed a place to live and I wanted money. I like money. I want money. I want more money. So I was like, how can I put those two together? And really, how I did it was I went to get a financing, and I'll talk about how I did that. I'll talk about how I got the permits, talk about how I contracted it, talk about the work that I did and the help I got from family. Like this wasn't like a Zach waved a magic wand and had a bunch of cash to just pay everybody to do it. No, your first deal, like most of you guys and girls out there that are looking at doing your first or maybe in your second deal, most of you are going to be scraping to do it. And that's super normal. And when you're starting any wealth building journey, whether it's a business, whether it's real estate, whether it's stocks, whether it's something else, like most people aren't just handed a bag at them. And if you are handed a bag, good for you. You can save yourself some time and some effort, but you're still going to have to put in a good amount of work if you want to be a successful real estate investor. I got our photographer to take a photo in front of me, with me in front of the house, because he was the guy that done a bunch of media for us. I was like, hey, James, like, can you get a photo of me in front of this one? I want like a before shot. And this is like a, you know, bright-eyed and bushy-tailed new investor that literally did not know how deep I was going to get into that. Like this is
Yeah.
the before, right? And I don't have
Yeah.
that many grays yet, but there's definitely some there. So this was a bungalow, 1,100 square feet, double wide driveway, single car garage, 50 frontage, 125 deep lot, side entrance that goes directly to the basement, layup. I'm duplexing this bad boy. So side entrance right there. I had to put this photo up of the basement. So if any of you guys that have done any of your own work on a project, you could smell the photos in this, Adam. This was a cat in a doghouse, all
Hell yeah,
carpet
dude.
for about 20 years, and it smelled like cats and dogs.
Yeah.
So the deal was my wife, her brother, my in-laws, they were gonna come help with demo. Had a bunch of the buddies over to smash down all the walls, take care of the heavy stuff. Family's gonna help us haul it all out of the basement. I asked Michelle, my wife, and my mother-in-law, my father-in-law, I was like, "Oh, do you guys want to do the carpet or the bricks?" And they decided they wanted to do the bricks. That's how sticky the
Yeah.
carpet was. So
Yeah.
I got the gloves and the mask on. I'm rolling up cat pee carpet, hauling it upstairs, tossing it in the dump in the middle of December. Like, guys, like that's how I started. And so I had never done a renovation. I'd never done any handiwork. I hadn't even built a effing deck. And I'm like, sick. I'm demoing this piece of shit cat pee house and I'm converting it into a legal triplex or a legal duplex. So my mother-in-law's hauling buckets of bricks out there. And this shot right here is of the living room. And Adam, listen, if you guys are out there, how do you
Man.
get deals done? How do I find value? How do I get deals? There's a big element of just making it happen. So I left this
Yeah.
photo up here because this is the living room and the dining room. And I remember this was when our market was hot. It was listed at 450 and my partner Matt went to go take a peek at it. I'm about to leave for a hunting trip that afternoon or that evening. And he says, "Hey, if you don't go buy this one, I'm going to buy it. Like this one's perfect. I think we can get a good price on it." So I submitted, I went to go look at it, put an offer in 2 hours later. It's like 3:30, 4 in the afternoon at this point, and the listing agent's humming and hawing. She says, "Oh, well, I don't know. I think we might wait for the weekend." I'm like, "That's not an option. I'm gone. Like, if we don't get this done tonight, like this deal's gone. Like, I'm leaving town. I don't have cell service. Like, this isn't getting done. Where are you at right now?" And she says, "I'm at the seller's house." I said, "Okay, great. I'll see you there." And I hung up before she could say no. I drove over and I sat in this living room or in this dining room at the table with the seller and the listing agent to hammer out the deal that night. There's a big element of being successful in anything, whether it's real estate or anything else, is just gotta just take some action. I could have
Yeah.
fumbled the negotiation. Maybe they could have thought that there was more pressure. I was putting more pressure on them, or I was really trying to ram the deal down their throat. But I came there with open arms. I really appreciate said thank you for having me over and giving me the opportunity to talk to you about this. I'd love to figure out how to make this happen. Here's what I want to do. I need a property for me and my wife to live in as well. Like, let's figure this out. And boom, hammer that out that night. The duplex conversion is take a single family home and chop it up into two legal units. Typically, your fire separation, your ceiling height, your windows, your daylighting, your egress are going to be the more complicated things that you'll need to go through for the permitting process, which I'll talk about briefly. But at the bare minimum, Adam, what is a duplex worth? What is a vacant, nice duplex worth? All right. What
Yeah.
do single family homes that are typically easiest and most economical to convert into legal duplexes? What do those sell for? Okay. If you guys have no experience, get your realtor or get off your ass and make some phone calls and go look at properties that are legal duplexes so you understand what they're worth, how they're laid out, what's good about them, what you don't like about them, and then go look at properties that are suitable for converting to legal duplexes. In our market, like most of Southern Ontario, bungalows, raised bungalows, and split levels are typically your best bet because they have side entrances to basements that have ceiling height that's high enough to meet the minimum requirements. The next missing piece that I get a lot of questions on that people have a lot of problems getting answers to is like, how much does stuff cost? Talk to other investors, talk to contractors, get quotes, watch videos on YouTube channel like this. Like a lot of even the guys that talk about financing stuff, they have lots of information on how expensive things are, how to finance them, what works best. But my quick and dirty advice is look for the best location you can comfortably afford and find a property that is in the worst condition.
Yep.
Desirable locations never go out of style, Adam. They just don't. They sell better, they have less vacancies, they have higher resale value, less time on market. Location, location, location is the best thing that you can focus on. Get the best location you can afford and then focus on the worst cosmetic condition. I can't advise anybody to do anything on this YouTube video, but if I was starting, I would avoid significant structural damage, avoid, lots of engineering that you're going to have to do. I'm not saying don't do those, but the amount of risk that you would have to take, you'd have to get a better price, more
Yeah.
conditional period. You'd have to adjust your expectations and your strategy. Just blanket statements here. Cosmetics, there's lots of money to be made on there. Even a donkey like me that has soft desk hands can figure out how to do the work. So I think that gives you a little bit more opportunity as an investor.
And
And I
and
think
in addition to that, stay away from the D class neighborhood for your first building. Just don't do it.
it's
Like
just not
save
worth
a
it.
little bit, just save a little bit more money. You get like minimum C neighborhood and ideally like up and coming C plus, right? B minus, and then buy the worst house there. Cause like it's so detrimental if you get into that D class neighborhood on your first one and it goes wrong. Cause
Yeah.
we really don't have great rules when it comes to landlord tenant board. Things are just more expensive than you think and they take way longer. So like it's not worth it. So
Yeah.
in
And
addition to
that's great
everything Zach
advice.
said, stay out of there.
Unless you're a little bit more experienced with that world, in
Yeah.
terms of managing tenants, managing properties, typically you're going to want to stay in a B or better neighborhood. And for me, I wanted to live in it, and I've lived in some terrible neighborhoods, both locally and in the GTA. So for me, I was like, I know that I need a place that I can stay at, for at least 5, 10 years if need be. Or some place that I know I could turn around and rent out easy, or even sell for a profit if I have to do that. And in D or C neighborhoods, that's just a little more challenging. So I think great advice. And for me, I needed a place to live and I wanted money. I was renting a place, but I did the math on how much I was going to purchase the property for, how much it's going to take to renovate, and what it was going to be worth when it was done. And my net result is I was going to be living for $200 more a month, just under. It's like 180, I think, a month. And I was going to own a property after it's all said and done. The thought that it's more expensive to own and operate a property, it is, but the benefits dramatically outweigh the slightly higher monthly cost, especially in my situation. Doing the duplex conversion just gave me more options than a single family home did, in both to live in it, to rent it out, to refi, whether I was selling it, whether I could keep it and rent it out forever. I just had way more options that made more mathematical sense in terms of rental income, resale potential, and refi. I don't want to get too off the rails, but I'll leave that there because I think the how is really what's going to move the needle. And so for me, financing is going to be the trickiest. Typically, Adam, that's the biggest learning curve is the different options with financing and the pros and cons of going with different options. So I opted to go 20% down with an A lender, but I needed a co-signer because I was an independent contractor and I hadn't had 2 full years of business operation and taxes filed and paid and completed before I wanted to close on this deal. So I already talked to a few people in advance of getting a cosigner, family member co-signed for that loan with the expectation that when the refi was done, they would be off. And I did the math, talked with the mortgage broker about that scenario, got the A-OK, away we go. Now, I could have put less down than the 20% down, but I had enough to put the 20% down, and it was going to be cheaper for me to put 20% down and avoid any of the insurance costs than it would be to either take a loan or do more manual work to complete the work for the project. So what I mean by that is, say I needed an extra 10 grand to put the 20% down. Well, it made more sense for me to do that than it would be to spend that 10 or keep that 10 grand and spend it on renovations because I could find a way to save myself 10 grand on the renovations by doing more work myself, getting other trades, ordering my own materials, whatever it might be. And next up for the permits, Adam, a lot of people have a terrible experience with permits when they first start, and I don't blame them. It is a steep learning curve. And I don't know about you, but planning departments and building departments don't give a shit about your level of knowledge and information and experience when it comes to permitting. They're like, this isn't done perfectly the first time. Get out of my face. Stop wasting my time. We're too busy. And so
Yeah.
what I did is I went to other investors that had done the exact same project that I had just done and was like, hey, here's my plans. Here's what I'm thinking for the permit. What do you think? Lo and behold, I got a couple really good tips. Permit application goes in, smooth, easy peasy, gets approved within 10 days or less. So I get it. If you guys want to learn a new skill, do it. But being really good at submitting permits at this stage, if you're looking for your first, second, or even third deal, isn't going to move the needle as getting good at other parts of investing in real estate is. You could outsource that, and it's very economical to have people help you with that. And they're going to be
Yeah.
way better than you're ever going to get at it. So I was willing to offer some compensation to people to help me with that. Now, the work, Adam, the work. And I know I've
Yep.
seen, you're still a handy guy. You've done some stuff. Me, 0% handy. But the dirty, simple stuff, like, I was like, "Yeah, I'm gonna do that." Like, I dug the window wells before a rain and a snowstorm so that I didn't have to pay a guy a few $100 to dig out my window wells, right? I'm getting rid of the cat pee carpet. I'm getting the property ready for framing. I'm doing the insulation. I'm painting. I talked to a couple of buddies of mine. One was able to help me with the trim. So he's able to cut, I'm able to install, right? Same with the flooring, like exterior work. Like there are so many things that you don't need a ton of expensive tools and gear for that you can save yourself thousands. Now, I recommend you do that. I actually wanted to do it because one, I couldn't afford not to, and two, I needed that experience to know what I was capable of and what I was willing to or not willing to pay contractors for because I knew if this went well, I was going to do multiple of them. So, understanding what you are and you're not willing to do. If you're not willing to do anything, that's fine. Hire a general contractor to do it all for you, unless you want to general contract your own projects in the future. If you're saying, hey, Zach, I love this idea, the numbers make sense, I think it's a great investment strategy for what I want, but I'm not capable of doing any of the actual work, get a good contractor that's done these deals for you before, get them to bang it out for you. Maybe you can learn with them along the way, or you can supply some of your own contractor contacts. But having somebody with experience with these types of deals to bang it out for you, they'll get it done quicker and ultimately for the same price, if not cheaper, than if you tried to do it yourself. And your finished product's going to be good. That's just my 2 cents. Had I done it over again, I think I still would have done the work because that experience was good for me as an investor. But if you guys are out and girls are out there, hey, I'm going to keep my day job. This is just kind of the side hustle to start the wealth building, the real estate portfolio. Just think about it. And then the refi, baby.
Yeah.
It's different now than it is then, right? But so is the property, right? So the
Damn.
whole idea of a refi is you got to finish it, baby. So this is the living room, kitchen, dining area, right? New flooring, new trim, pot lights, interconnected fire alarms, tile, the whole nine. Do it up big. It's nice. You're taking a 4 out of 5 that somebody can't live in and bringing it to a 9 out of 10. That is a big enough jump where your refinances can really make sense. Basement suite, tiled backsplash, stainless steel appliances, good ceiling height, 2 bedrooms. in-suite laundry, the whole nine. For the first deal, if you guys are doing something like this in 2024, look at single family home prices, look at construction costs, look at duplex prices. If you don't want to do that, or you want to compare your numbers with mine, send me an email. I can get you straight on that in about 10 minutes or less. Why? Smaller value add projects can make a ton of sense. One, if that's within your budget, you don't have cash or experience or time to do anything more. Okay, these can still make good sense for investors. You get experience with the city, you get experience with contractors, you get experience with tenants, and then you can apply the exact same things that you've done there with a larger project or with the same project and just do it better the next time, which is what we did. We just repeated this process until we had enough capital to go into a bigger project or to do more at the same time. So I think it's important to do projects like this if you want to be a real estate investor long term and you want to take that seriously. If you're saying, hey, Adam, hey, Zach, I think real estate's great. I might add one or two properties here and there as a part of my whole investment kind of retirement strategy. Okay, there are other options for you that may be a little bit more hands off, that may not offer the same benefits as a duplex conversion or a BRRRR project that you may want to consider. But for me and for a lot of people that we've done business with, this is the first or second one to really start the portfolio that they want to scale for 10, 15, 20 years. All right, then this is a good experience to get a little taste of everything. And then last but not least, the how. If I had to go back and do it again, I would learn more about financing earlier. It is a real,
Yeah.
real key cog to real estate investing. And there's just so many different avenues. So if you guys have no experience or you want to get into the space seriously, connect with a broker that's willing to teach you. They are happy to take your business. And I still do lots of business with brokers. They can be very, very valuable, but they will be able to teach you how the different parts of a deal impact your financing for acquisition, for refi, for your next project, whatever. Permits. Talk to the city, but you're just better off talking to other investors. The city's going to
Yeah.
tell you what not to do. Other investors are going to tell you how to get shit done. Go talk to other investors. And then general contracting. I mean, Adam, your problems are profits. You're picking up the fucking phone, part of my language, but you're picking up the phone and you're finding people to make it happen, right?
Yep.
General contracting, it is very tricky. You're working with a lot of different people. There's a lot of moving parts. It can be very expensive. It's very easy to make mistakes, but this could be mitigated by having a bigger network and having good relationships with contractors. And the only way you do
Yeah.
that is you talk to them. You start talking to more of them, or you start talking to the good ones a lot, and you get really specific on what you need and what they can provide. Sweat equity. If you're not willing to pay or you want to do it all yourself, time to get to work. That is what I did. I did a little bit of everything myself because I wanted to learn the process and I couldn't afford otherwise. There is nothing stopping you from just going and doing it. If I can do it straight up, anybody can. I have flippers for hands. I was still able to figure out how to do it, guys. Like, I'm trying to give you a little, you could do it, kiddos, right? So, quick breakdown of the first deal. I was hesitant to share numbers because these numbers do not apply to what our current market is, not even close. But my purchase price, 425. I estimated my rental budget was going to be about 80 grand, ended up being closer to 110. So, like, that's a 30 grand swing. That's big. So my all-in costs were pretty close to 550, but I refied at the 750 mark. New mortgage was about 600 grand. So I took out about a buck to a buck 25 right away. And that was my seed money for my next project because I could go close on another one with that down payment. All the while I'm selling real estate, I'm saving my cash, and I'm using that savings to go do my renovations on my next project. And what I actually ended up doing was had enough money to go do a project by myself, but partnered with my partner Matt on our next deal so we could do two or three at the same time. And then actually, this
Yeah.
one I recently just sold this bad boy. Do I have a photo? No. I sold this bad boy and pocketed another 300K from this one. And I've owned this property for less than 5 years. Not only did I walk away with 300 after the sale of this property, but I also got that 125K right away when the project was done. And that was my fuel to go out and do my next 3, 4, 5 projects. This is just one deal. And this is a small deal. This is a single family to duplex conversion. Yes, the market went up like crazy for a few years after. Yes, I had a lot of help. Yes, I did a ton of research. And yes, I was in the business. But the first 5 years of your real estate portfolio is where a lot of the magic will start to happen. You typically
Yeah.
do not get big bumps in the first or second year. That is very, very rare. I got lucky. I took advantage of it and made some smart moves. Yes. But you investors out there, I've said on the channel before, and even on videos with you, Adams, you could buy one really middle of the pack investment property every 5 years, and you're going to do awesome. in 10 to 20
Yeah.
years while you're building your career, having your family, doing whatever you want to do. So don't think you have to go out and, recreate the wheel or make everything happen. But these types of deals still make sense for a lot of reasons and are still a good fit for a lot of investors for a lot of reasons outside of just them being profitable. Great learning experience, lots of options. You can mitigate a ton of risk. We love these types of deals for newer investors. We still do a ton of them. And I do still think there's opportunity for deals like this or similar to this here in Waterloo region. Just not these numbers. Sorry, guys.
Yeah, no, it's factual that the numbers are maybe a little bit different today, but at the end of the day, like as long as we think about real estate in the right context of like having patience, being willing to stay in the market until the time is right for you to either refinance or sell. So like you need to be well capitalized, which is always a challenge that people bring
That is
up,
a
but
challenge. Absolutely.
part of that is working with the right power team. Like that's exactly why we say like you have to work with a great broker because they can help you to plan that stuff out. The other thing that like there seems to be a big narrative on the internet that I really have gotten away from, which is like I'm gonna like buy a bunch of real estate, quit my job early, and just retire.
But
That's
that's a
possible.
thing.
No, it's possible. It's just you need so much capital at the
Yeah.
start that it's really unrealistic to think about turning the tap off because most of the financing until you get into large commercial deals relies on you having a solid income to get started. And that's for
Yeah.
renovation budgets, that's for your overages because that happens, and that's for prepping for any of the risks that people generally complain about, whether that's non-payment of rent, whether that's the rental budget going over, whether that's the renovation taking too long, like all of those
Yeah.
things are going to happen eventually to you. And it's just those first few deals, you have to get them right because they make such a big impact on the long-term success of your portfolio growth. And if you get them
Yeah.
wrong, it's so impactful. Like if you mess this first deal up, it's going to really hurt because that's probably your only 200,000 that you had there. Like it
Yeah.
really is like you're all in on the first couple of deals, but after that, like you can see $300,000 in 5 years for what would have taken, I assume, like a few months to do that renovation. Like that is so incredible. That's 60K a year of money that you earn essentially in the first few months of doing the actual hard work, which yes, you got to pick up the phone. Yes, you have to leverage your entire network to get support. Like there's a lot of stuff you have to do and it's definitely real work, but the reward is so incredible if you can stick it out. And yeah, and I think one thing you talked about there is like talk to other investors. Like there's meetups in every city. And when you go to these
They're
meetups,
awesome.
for the most part, everybody wants to talk to you. And people generally have this bias of wanting to share their successes. So when you're asking for help on something that you know that person's already done, they're more than happy to share that story because it's one of their wins, right? It's one of their hero stories where they're like, I did the permit and this is how I did it, right? They
Yeah.
want to tell you that story. And it's just a matter of asking and being in the right rooms. How do you get in the right rooms? Pick up the phone, right? Google, hey, call another investor. There's people in the comments here that are investors, right? There's people here that we're talking to. Just talk to Zack. And it's just like, where are you hanging out, right? Like, what meetups are you going to? Who are you learning from? What rooms should I be in? And they're everywhere,
Yep.
right? And for the most part, like real estate meetups, at least a couple years ago when I was going like every night of the week, it was like $20 to get into the most expensive one. So like that is
Yeah.
like probably the best investment you could ever make, right? And a lot of them are free. So just like
Yeah, and
it's a
you're bumping
matter
into
of
people
picking up
that
the phone.
have hundreds of units or have done a
Yeah.
couple renovation projects or just getting started or even just thinking about getting started. Like
Yep.
there is so much value in talking to other investors. And that's one part of the reason why a lot of people come back to the YouTube channel though too, is because people like yourself and myself actually invest in real estate and do this full time. Like this is what we do. And
Yeah.
so I didn't want to make this like a rah-rah, you guys can do it, but I also just want to give you guys and girls that need that push, just like Adam saying, like, pick up the phone, do some Googling, go meet up with these other investors. Like it is so doable. Now, the idea of immediate gratification, sorry, investing real estate, not for you. It is not immediate. Like this is you, I'm doing things now that I'm going to see in 10 years. I'm not going to see in a year. And so I need to know that if I do this now, that 10-year payoff is worth it. And for me, it's an easy choice. I was like, if I don't do this now, I don't get the 10-year payoff. Therefore, the 10-year payoff is obviously worth it. So I'm gonna really get into investing. And so I wanted to touch on real quick, and we're getting a little tight for time here. So I wanted to go through like how I did 0 to 20 units, and then how we're going from 20 plus. And this is like just Zach notes, Cole's notes, the general, big strokes paintbrush here. If you have cash and you can get good lending, burring or buying a buy and hold smaller multi-unit, giddy up. All right. If you have more cash, go and buy something bigger, 6+ units. If you don't have enough cash to buy a property like that, all right, do your duplex conversions, your triplex conversions, burr a duplex or a triplex. Lots of opportunities there, right? If you need cash, if I needed cash, I would just flip. So I would buy a property for duplex conversion. If I could refinance it enough, I'd do that. If I couldn't, I'd sell it and take the profits, and that profits would fuel either a burr or a hold or another flip. And what I would typically do is I would do 2, maybe 3 projects kind of on the go at the same time. One just finishing up, about to close and either sell or refi. The next one, renos that already kind of started, and then start shopping for my third one as I'm going. Now I'd be looking for flips. I'd be looking for 30 to 50K each. If I'm netting 30 to 50K on a flip, I was going to do it. That's 50K. I could do 4 of those a year and make an extra 200 large. 200 grand is a ton of money. That is one hold for me. All right, I'll do
Yeah.
that. And then I just repeated that until I got to a point where banks told me to screw off. I had too many mortgages and I ran into policy issues, and I was forced to explore other options. And the
Yep.
policy constraint is basically it's going to be financing and cash that are going to eventually hold you guys back. You're going to run out of good financing, or you're going to run out of cash, or both. Because at the end of the day, contracting, renovations, fixing stuff, that can be solved. Getting tenants, that can be solved. Getting insurance, that can be solved. Finding deals, you can find deals. It's not the deal. Eventually, it's going to be your financing, your cash, and your time that is going to hold you back. So common
Yeah.
challenges, and Adam, I know you're going to echo some of these, but feel free to jump in. Lending.
Yep.
Here's some solutions to the common problems I get with people with lending. Find a cosigner. Find a partner on the deal if you can't get the
Hmm.
lending that you guys want. Negotiate seller financing. What a crazy idea. Find a different or a better deal. Find a
Yep.
way. Do more of the work yourself, or make less money on the deal and take the more expensive financing. Like,
Yep.
there are options. Reno costs, get other quotes, source your own materials, get alternative solutions to the design that you proposed, forego doing some fancy stuff, reuse appliances if you want, try and keep more of the stuff in the property, do more of the manual labor yourself, ask if you can, work with a general contractor or with other investors. Like, there is a way to get it done cheaper. And I'm not saying do everything cheap with the renovations. I highly recommend you kind of stay in the middle ground. You don't want the most expensive, but you don't want the cheapest. But that's just me. And then these people that say they can't find a deal. I'm telling you right now, I could go on the MLS in my market right now and pick out 10 properties that are worth viewing in less than 5 minutes, that there could be value there. Call the agents, call people that own property, door knock the neighborhood you want to buy in, join Facebook groups, get in touch with wholesalers, go to a different location that has numbers that make more sense for you. Call mortgage brokers, see if they have any clients that have investment properties, other investors that hold real estate as well. Hey, you have any inventory? You think about selling? No? All right, who else you know? You're telling me they don't know somebody else that has real estate or knows people that buy and sell properties? Come on, come on. Guys, this is the keys to the kingdom right here, right? And then progressions of portfolios out. Single family homes, primary residence, house hack that, duplex them, triplex them, maybe get into some flips or some burrs or some buy and holds. And then we want to save our cash, we want to refi, and we want to partner to get to those bigger deals. Now, I repeat this progress. So I'm evolving past kind of the single family, and I'm moving into the multi-unit space almost exclusively, and the smaller developments, because I cannot get the returns and I cannot get the lending on to make sense on the smaller projects for what I want. They still
Yeah.
make sense from a I can buy this property and I'm not underwater on it. Okay. But from my perspective of what my goals are as an investor, I'm not going to be able to get there quick enough. I couldn't do it at the scale. So, like I said at the bottom here, cash, lending, and time become the constraints. I can't
Yeah.
do enough duplex conversions to make it worth the time, energy, and capital required to do 5, 10 a year, right? For what I want, that doesn't make sense. So, very quickly, investors will get to a point where the projects are either too much to manage or the tenants are too much to manage. Once you get 2, 3, 4 properties under your belt, you got a primary residence, you got a family, and you got a career. All right, that's kind of where people start going a little crazy. And you got to kind of really make that decision. Okay, am I going to stay steady and this is going to be my portfolio? Or do I sell one or two of the smaller ones and then combine them into a larger property? That jump, people think it's really scary, Adam. Like, hey, I have a single family home or I have a duplex, and like that's enough. That's fine. Know yourself as a person and as an investor, but I'm here to tell you the 6+ units are not nearly as complicated as you may think.
Yeah.
Think about it as if you're buying a business and understand that you can finance the purchase of that business through commercial lending. And commercial lending is the key. Buying one 30-unit apartment building is exponentially easier to find, purchase, close, and operate than 30 single family homes. The
Yeah.
math and the time associated with those types of deals, it is not even close. And I just wanted to highlight, it's not the deals, it's not the tenants, it's not the insurance, it's not the maintenance. It is going to be the time and the money that will eventually hold you back as an investor. The 30-unit apartment is, like I said, going to be much more straightforward to own and operate. And there's actually going to be more room for you to afford maintenance, pay staff to help you with that building than there is if you do the 30 single family home. It's just a
Yeah.
logistical nightmare once you kind of get up more than 10 different properties that are all single family or duplexes. None of them are going to be making enough money on their own to be able to afford to pay a property manager, to pay full-time maintenance staff. So you as the investor are going to have to pick up a lot of the slack. That's how I started. We have a team. We had to build a team to help us take care of stuff because we were building our portfolio. Well, very quickly you realize that the math doesn't math and you're still spending a lot of
Yeah.
time and you got to make that change. So real quick, this is really some of the golden nuggets of this video for especially for investors that are, more focused and knowledgeable in the residential space. Commercial lending is going to blow your mind and really give you an opportunity to explode your portfolio. We were always thinking, the numbers we were running and the deals we were seeing, you needed 30 to 40% down to meet the ratios. Well, the amount down, the rates, and the amortization in the commercial space versus in the residential space, totally different. Adam, you guys have fire videos on commercial financing, specific types of deals, specific lending programs, but also just like general concepts for commercial lending. So if you guys are looking at this video right now, this is just a quick and dirty. So I can share just a little bit of what I think is the most important differences, but there's a ton of videos on this channel for that. But the biggest thing is your debt coverage ratio. If you don't know what a debt coverage ratio is, hit that Google and learn about that. I always thought rates were higher in the commercial space as well. Well, we're closing on one, and we'll do a deep dive on this deal after it closes, Adam. 30+ unit building in a major city in Ontario. We're getting at 3.5% right now because the mortgage bonds took a dive on us. They're slightly under 3 now, and it's basically whatever that rate is plus half a point is going to be our lending. And you can get 40 to 50-year amortizations. Oh, baby,
Crazy.
talk dirty to me. Numbers don't lie. Oh, I did this. This is my artistic flair for this month's video, Adam. You know me, I'm a practical guy. I
Love it.
wanted people to actually see the numbers. Like, I mean, 5-year fixed right now, most banks are around 5%, give or take, let's call it. On a 25-year amortization, which is probably what most people are going to be getting, you're $5,816 a month on every $1 million you borrow at that rate and that amortization.
Yeah.
30-year, you save yourself $500. 40-year, you save yourself another $500, give or take. At a different rate, so at commercial rates right now, this is CMHC insured, 3.5%, 25-year AM, just at a 1.5% lower, I save myself $800 compared to the 25-year. But I can get 40-year AMs. You can't get
Yeah.
40-year AMs in the residential space. So if I compare the best option in the res space versus like a normal option in the commercial space, it would be a 30-year AM at 5%, 5-year fixed. My payments are
Yep.
$5,337. For the exact same loan amount that you can go and get right now, my payments are going to be $3,874 in the commercial space.
Yeah.
That is $1,500 difference,
Yeah.
20%
That's
difference.
powerful. That's powerful over time, right?
It allows you. I'm not saying, hey, go get all the debt you can. Mind you, if you're adverse to debt and you're in real estate,
I mean,
brother,
listen, at 3.5%, go get all the debt you can.
brother, load up. It's time. It's time to start thinking about backing the truck up again. But I just wanted to, like, if you don't have any knowledge or experience in commercial real estate and you want to take investing seriously, look at that. Go look at the videos, contact the other people that do financing on this YouTube channel, contact myself or Adam. Please, please, please let us show you the way. And now investing, just beyond, guys. Take a serious look. How do you fit in? What's your 5-year goal? What's your end goal? For me, my end goal is my real estate investments are going to take care of my life. I'm not going to have a job. I'm going to have staff that are going to help me manage my portfolio. I'm still going to work because I love what I do. But the 5-10 year goal is I have enough properties that are generating me enough income that I don't got to show up Monday to Friday, 9 to 5 to do anything if I don't want to. And I'm going to have property managers and we'll have bookkeepers. We'll have staff to deal with everything. We'll have our maintenance crews. Like that stuff's already there. Now it's just about scaling it. Right. So for you, what is it? Do you love your job? Are you going to work that career for the next 20 years and wait for the pension? Or do you want to get the heck out as quickly as possible? Then you can start looking at what's your time like? What capital you have? What skills do you have? And then build a team around what you need or partner with people that you need in order for them to accelerate the growth. And that's what I did. I partner. So look, if you're going to be building a portfolio, you want to analyze what you currently have. You want my 2 cents to take your idea for what your 5-year, 10-year, your end goal is and what you're currently working with now. Hey, what's the best way to kind of make the next 1 or 2 steps? Like I'm confident you guys will go figure it out and you'll crush it. But open invite, email portfolio, send me a couple notes to my email address. Let's hop on a call. I have received coaching like this when I'm starting in real estate, when I'm scaling my portfolio. I have these conversations with other investors that are 10 times bigger than me, so I can learn what I need to do to get to that level. I am offering that to people that are starting off or want to scale their portfolio. Start the conversation. And I mean, like, look, you can watch the YouTube videos for free. Emailing me and calling me is free. Talking to guys like Adam and other people on the channel is free. Like, this stuff can dramatically improve your success as a real estate investor. So open invite, Adam. Would love it to reconnect with some people that have been watching the videos I haven't talked to yet, or people that are new to the channel and just want to say hey and get my 2 cents on some deals or some ideas they have. That's real estate investing. That's what we're here for. So we'd love to connect with you guys.
Yeah, that's fantastic. And that's actually like why this channel started, right? It's Matt McKeever started this years ago so that he could share his journey as a way to benefit other people that were facing the same or similar challenges that he was trying to build his portfolio. And I know, like, just through this channel, some of the people that have been on here, some of the people in the comments, if you can reach out to them and just start a conversation, like, it will change the trajectory of your entire life. Like the difference
And you don't say that lightly.
Zach's right. You could buy one property every 5 years and you would literally be like infinitely better off financially. But the real powerful tool that this channel offers is the ability to do a bit more than that if you want.
Definitely.
Right? Like you could just learn a little bit more than what you would have known without it and buy 2 properties every 5 years or do better than that, right? Like there's people that have come and started networking, and like James is a great example. One of my friends who he bought his very first property from me, and then he bought
James,
like
his first one from you?
Yeah, dude. And then he bought like a lot, right? And now
Yeah,
he's
he's a
buying like
beast.
storage units all over the world, it
He's a
feels like. And
beast.
he's got like a lot of real estate now. And it started with an idea, right? It started with networking. It started with him taking a shot and putting a bunch of effort in. And it's just like that's just one little success story where I'm like, man, that guy went from like 1 unit to like I don't want to put a number on how many units he has, but it's double digits minimum, probably a bit more. And it's just because he had the balls really to just ask, right? To be like,
Take
hey,
a
I
little
don't
bit of
know
good
what I'm doing
advice.
here. Take some
Yeah.
advice, learn some stuff, try some stuff out, and put a lot of work in. But that's the difference. So please reach out to Zach. It's incredible when somebody's willing to do that for you. Like the amount of tuition you save by just
Oh,
being like, hey, Zach, what do you think about this? And he can take a look and apply years of experience in 15 minutes to your idea and tell you why it's a great idea or why it needs some improvement. It's invaluable. Like it's truly the most incredible thing that we have today as a society, is the ability to connect with so many different people that have the experience that we want and need.
and
Yeah, I mean,
nothing, Adam, would make me happier than helping
yeah,
make people millionaires. Like
yeah,
somebody comes to
and
me and
I've
they're
done
like,
it.
"Hey, same." The clients that are like, they have come to us and be like, "We want to do this. This is what we want to do. This is what we do for work. This is what our family life's going to be like. We want this. Can we do this?" And
Yeah,
if people come to me like that, I want to just grab them and be like,
yes,
make it. Yes, we are
yeah,
going to
we're
make it.
here.
Hell yeah. That fires me up because, I
Yeah,
had people taking a chance on me and pushing me when I first got
yeah,
started to show me what was really possible. And once you really see what's actually possible,
Yeah.
like, you're not turning back. Now, like, as an investor, as a businessman, as a person, I'm like, I can do anything, and as corny as it may sound, the power in, like, having other people push you and help you, like,
Yep.
realize that will make you so much more money and give you so much more control and power over your life and your portfolio. So, this has been an awesome video, Adam. I only have good experience, and me and you have a good time when we come on here, so I really appreciate you
Of
having me on
course.
another video this week or this month,
Yeah,
geez.
no worries, Zach. Well, I know you'll be back next month. And if you guys enjoyed
Yes,
this
sir.
video, make sure you subscribe because Zach's here every single month with different market updates. He's got the investor hot list. He's got a ton of information for you guys. And ultimately, if you want to grow a great portfolio, you're going to get to the point where you specialize in doing one thing or maybe two, but not many more than two things. And so
Yeah.
if executing the deal is your superpower, you need someone like Zach to be able to go out and find the deals for you and to be able to give you the right information because that's all he's doing. He's staring at the market, he's identifying deals, he's identifying what's going to make an impact on your actual ability to do a great deal. And that's why you need him, right? You need a great broker, you need a great realtor, you need a great lawyer, you need a great accountant, you need great contractors, and you can't be all of those things at once. At the start, you can try to do a bunch of those different hats to save some cash, but eventually the real success, the real scale is going to come in allowing the specialists to do what they do. And that's what Zach's here for. So thank you,
Yes, sir.
Zach. And we'll see you again next month. And we should have some good fall numbers by then, I would imagine. So, or at least
I
we'll be
hope
starting
so.
to have
See a
it. So
little
I'm
bit of a
excited.
change. Yeah, I'm looking forward to that as well. Really appreciate it, guys. See you soon.
Awesome. Talk soon.